presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. What do we have? You have the Dow down 24, NASDAQ up 17, S&P's up 6.5. Gold contract flat at $1,305 an ounce. Silver, $20.98 an ounce. Platinum down $2 at $1,483 an ounce. Copper's flat at $3.20 a pound. Light sweet crude, 104.42. Bonds, get them going sideways. The 10 years flat at 125.12, 30 years off 3 ticks at 138.15. 30 years already over her May 29th swing point with volume. That baby's going to make the run to that 142 area. King dollar up 50 ticks, trading at 80.91. You got the euro down 7 at 134.57. We have the yen trading out there at 101.54. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so out here today, you talk about a tight spread. We have a very tight spread. The low and the cash is 1982. The high has been 1989. We're at 1987.50 right now. Now, your last highs out here go like this, folks. We had the high that was established on the 3rd of July. That was 1895.59. You tested that with the 1883, which was on the 16th. Yesterday, we got to 1986.24. So your benchmark is the first high that was established up there on July 3rd as well as yesterday. Now, we're above both of those. The bottom line, no matter where the volume is, if you do close above them, guess what? You can go higher. Very unusual that you have a market that the price spread is so small at highs. You either normally you break out or you break down. If we take a look at the SPY is screaming that it wants lower price. So the SPY right now got to a high out here today of 198.85. We're at 198.63. Your first high that was generated on the 3rd of July was 198.29. Your second one was yesterday, which was the 198.50, I think. 198.56. Yesterday you did 67 million. Today we've done 43. She'll probably do about 50, 55 million. Bottom line is that where she closes is going to say quite a bit. NASDAQ composite. We take a look at the composite. What we have with the composite is this, because all the indices are going to have light volume once again. The composite is on right next to its highs. Right, the high of the day was 44.80. We're at 44.72. The high that it's trying to test is 44.85.92, which also was the 3rd. Volume-wise, going to come in light. If we look at the NDX 100, the 3 Qs, we use the 3 Qs, and it's just to look at this, you're at 22 million shares. Bottom line, you've gone down with 40 million and 44 million. I suspect what we're going to do is probably about 20, maybe 25 million. We'll see if it stays at higher price. Guess what? You can get higher. Inside that NDX 100 today, you have what is putting juice into it on the way up is Intuitive Surgical. That's up $62. That puts some weight into it. The biggest weighting structure, though, that really is putting some juice into it is Biogen. Biogen's up 10%. It's up $34 at $338. Apple is up $274. Apple is the largest weighting, but it's only up because it's only up $274. Not putting a huge amount of juice into it. If we do go over to Apple, however, when we look at Apple, it's going to be interesting to see how this closes out. The reason being is that Apple got over its last high, which is 97.10. We have done 14 million shares. Now, it needs a lot more shares, but the bottom line is that if, in fact, we close up here, what I suspect you'll see is that, Apple's been trying to get up to its high. The high in Apple is 100.72, and that, of course, equates to about $703. We went for a 7-for-1 reverse stock split. Now, it's going up there in dramatically lighter volume, but the bottom line is that it looks like it wants to tap that baby. We go take a look at the last Celgene. That is up 236, trading out at 89, and if we go look at the IBB, okay, which is the iShares Biotech Index, okay, what you're going to see there is that it already did one ABC structure on the way down, did the full price projection. It basically looks to me like we got to a price point today of 260.31. That 260.31 is pushing into the first downdraft from the last trend down, which was on July 7th. Well, you get a rejection there. Guess what? The benchmark on this IBB is down to 207. So this could be setting up a larger ABC structure on the way down. We go take a look at. So that was putting juice into the NDX 100. You taking it out were the specialty chip makers. You had Xilinx down 695. That's trading at 41.16. You had Linear Tech down 260. That's at 45.07. Altera is down $1.55 at 33.46. And Advanced Micro is down, Analog Devices, rather, is down $2 at 51.69. Those babies, folks, are coming down with some real juice. If we take a look at, we do go over and take a look at Xilinx. What you have with Xilinx is that she got blown away. This is a very, okay, so I'll put this up. This is a very large ABC. Yeah, it's a huge, it's a monster ABC down. Your A point on this is 54, your B was 44, so it's $10, which gives you a $39.50 price point. If you want to see a classic A to B equals C to D, time in the trade, ABC structure on the way down, this is it. It did it in one day, though. 39.12, it hit. And if we put this back and we do this on a monthly basis, what you're going to see now is you're going to see at equity, no doubt, gets over all its swing highs from 2006 with light volume, continues to go from $33 all the way up to $55, and it basically takes all of a few months to get down to 41. The way this is set up, and this is going to be a heads up watching how this whole thing shakes out, Xilinx is set up to get down to 29.40. That looks to me like the first stop that on this way down. So that's a big number all the way down. Gold contract. What do we have with gold? What do we have with gold out here is this. She's backing down 50 cents out here. What we had out here today is that you had a spread in gold. 1303 was the low, 1311 is the high. We only did 80,000 contracts. What that is that's pulling back with lighter volume. If we go over and take a look at the GLD, which is a Street Tracks Trust, that trades at 10% of the price of gold, what you're going to see is that you're 125.62. You're backing down into, you can say whether it's the day of strength from the 19th of June, that we had 24 million there and you only had 2.5. Or if you take the downdraft that was created out there on July 15th, we had hit a price point of 124.36 with 10 million. So I like how the GLD is backing down. Bonds. We go take a look at the bond market. We start with the 10-year. What we have with the 10-year is this. She did 554,000 contracts today. She's hanging at this high. The swing point, the swing high from the 29th of June, of May rather, is 126. We got to 125.17 today. You closed out at 125.13. I expect you're going to see that push into it. and more than likely blow that baby away. The 30-year already has done that. The 30-year bond, we're at 138.16. She took out the 138.10. She took that out a few days ago, and she took that out with some conviction behind that move. 400. Yeah, she took it out. Well, 413 versus 400. Bottom line, she got up and over it. That bond market right now looks like it wants the 30-year looks like it wants to run out to this 142 area. Don't forget, folks, at TFNN, we start our programming now at 8 a.m. Eastern Standard Time. We go from 8 to 6. My new hours are 3 to 5 Eastern Standard Time. You get all that programming right on your cell phone, TFNN.mobi. You stay right there, folks. We're coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have Honeywell down 43 cents right now. Big Mac is off 92 rather. ExxonMobil's up 73. Boeing is down 323. You got Caterpillar off $1.56. And one of the tigers, we want to take a look at coffee. Okay, so coffee out here today right now, expansion up, was up 8 cents. And we're trading out at 176. So if we bring this up, and I wouldn't... Okay, so what you have with coffee is this, is that we've come off a high of 218. You're at 176. And if you're going to go long coffee, I'd let this first get into 184.90, and then you'd be buying the pullback if, in fact, you can get expansion into that 184.90. We've had 14,000 contracts today. As you get into 184.90, you need over like 17,000 contracts. Because what's happened is that all that did today, even though it looks nice, is that it was coming into that downdraft that had been created from the 27th of June. Sorry about that. Let's go to Mike in Cheyenne, Wyoming. Hey, Mike, what's going on?
Tom, how you been?
I'm doing great, man. You having a good day out there?
Oh, it's awesome day. We got Cheyenne Frontier Days going on. We just had Thunderbirds here in town this morning, so life is good.
How cool is that, man?
Absolutely.
The Frontier Days, man. I got to get out there. Get out there with my horse and my six-shooters.
Absolutely. It's a lot of fun. It's
I
a
bet
great
it
time.
is.
We get people from all over the United States and all over the world come visit for the rodeo, and it's just it's just a great time.
I can imagine that, man. I heard that Wyoming in general is just so gorgeous. It's amazing. And I guess when you go through those mountains, right, I mean, you can still get a lot of snow and there's a lot of mud, right? I mean, depending on like how the winter thaws out, right?
Absolutely. Like if you're in the right spot, you can probably get snow in July.
Wow, that's a trip. That's cool, man. That's cool. What are we going to look at today?
Tom, I was going to ask about GLOG. I was looking for an entry point. I was reading your book, and I thought if it was like maybe 24.63 might be a good entry point, or 25.65.
Let's take a look. It's GLOG. This is an international owner, operator, manager of liquefied natural gas carriers. The low is $12.99. The high is $32. They pay a 1.7% dividend. Okay, so let me bring this back. So when we look at this on a short-term basis, you had a high out there with no volume at $32. You come off the high downtown from 30 to 27 with 4.6 million. So, Mike, when we look at this, right, just on a short-term basis now, right, the way that we came down on July 7th and then July 8th, you always want to be cognizant that you're coming off a high. The high first half had very light volume. And when you come off a high with wide price spread and accelerated volume on the way down, it's like, okay, you got to be really careful because that's saying that, hey, we get a big seller on the stock, not a small seller. So now I'm going to put this on a weekly. That was on a 6-month daily. We put this on a 1-month weekly, and now I see what you're looking at. Okay, so on a weekly, what he's looking at is this, folks, is that we went on the 20th of the week of 20th of June. We went from 26 to 30. Nice price acceleration, nice volume. 14 million shares. You get into the high of 28. And that had 9 million. So now, well, this is going to be interesting. This is a complex ABC structure. I know. Okay, so now let's. So what I'm going to do first is this: on a weekly basis, folks, we're going to try to get. Well, we are going to get a price projection. Okay, so the A point is 16. Your B's 28. So let's say we get $12. Your C's 22. So it's $34. So 34 is A to B equals C to D. Now you can see what happened is that we went to 32.44. So that finished that ABC structure. That's the first part. So it's not a complex one because it finished it. It was, what, $1 and something off it. So, but for all potential, purposes, it finished it. So what I would do is this, because it's dangerous how this come down, but it's okay. That makes sense. When you finish an ABC structure on the way up or the way down, it does something other than continue on the way. But what I would do is now wait for a test of the 2463, Mike, and that's where it initially broke topside.
Right.
And what you want to see there is a rejection of lower price, and you're going to need dramatically lighter volume. The reason you're going to need dramatically lighter volume is that because of the characteristic from the week of July 11th, it's still, you want to see it get under that level, meaning under the 2623, and you really want to see it get under that level with about half the volume on a weekly. So that's 11 million shares that it did on the weekly. You'd love to see that do like 4 or 5, reject it, and then you got action. And the action you have then is that it wouldn't necessarily be an ABC up, but it's a consolidation, and that's a large consolidation, because if you get into it, let's say that you scale between 26 and 2450, you'd be gunning for a test of the high, which is about 30. Do you know what I'm saying? 32. So that's how I'd trade that out.
Okay, great. Tom, thanks a lot for your help.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Let's go over to the E-minis for a second, because I want to show you something, folks. Intraday out here. And these new hours that I'm doing, I absolutely love them. Why? Because we have markets that are open and moving simultaneously. So if we take a look at the E-mini, ESU, what you're going to see is this. Until I got on the air, there have been 2 separate intra-day sells out here. And what I expect you're going to see is that as we get into the close, the S&P is going to want to test the lower part of where they have traded this morning. So if we take a look at a 10-minute chart on the E-minis, what you're going to see is that at 9:40 this morning, 0940, you got down to 1975, and we did that down at that level, and we did 82,000 contracts. Then what does it do? It goes topside, hits a high out here with 64,000 contracts. Comes back down, well, and the high that was hit was at 10:40 a.m. Then we come back down, and we come back down with some juice again. We come back down with 34,000 contracts. That was at 12:30. We, right when I was just getting on here, was trying to test those highs. And we were testing the highs at 14,000. Now what I do, folks, is this. I use a 10-minute intraday chart when I'm looking at equities, currencies, futures, and trade off of that. Because if you're trading intraday, you know, bottom line, you got to know where it's intraday, not daily, weekly, monthly. Of course, what you try to do is you try to set up your larger position or your larger thought process as to where it's going, and then I'm incorporating that down into a smaller time frame, because that's the time frame I'm trading off. So those 2 separate benchmarks, the 1230 low, which is 1978.25, is gain before the close, before 30 minutes is up. And the larger one, though, would be quite a downdraft. You know, it would be giving everything back, meaning giving the 725 back coming into that close. But as we're getting into that close, we're going to be looking for one of those expansions with volume on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We have the Dow. The Dow is down 17. Nasdaq's up 20. S&P's up 7.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 18 right now. Nasdaq's up 19. S&Ps are at up 7.5. NFLX, we go take a look at Netflix for our man Mitch in Boston. Netflix, folks, is trading out at $4.27. It's down $4 today. And if we take a look at that is did break a B point yesterday with volume. So what you have is this. We have a couple different things. It was a total failure at 456. 456 is the highs that were generated in March. It got over those highs. You know, bottom line, stayed over those highs all of 4 days and then gave it up. Can't bust them up. Guess what? You're going to bust them down. That being the case, your A point on this, it's a 50-point A to B equals C to D. The C point is 457, so that gives you a 402 price point. Yesterday, the B point on Netflix was 428.20. The volume characteristic was 3.4 million. It takes it out yesterday with 8.1 million. So bottom line is that, yes, Netflix wants to get into lower price. What does happen here, depending on what type of vehicle you're using to sell this, Netflix, it's not bad. It's still not great, but it's not bad. Netflix has a 9.32% short position, so that's not bad. It's only 1 out of every 10 trades, shares that have to get bought back. In that, let's go over to Herbalife. Herbalife, yesterday, you talk about expansion. This is going to be really wild watching this whole thing shake out. So you had Bill Ackerman come out, and he came out, folks, on Monday on CNBC and on Bloomberg, you know, bottom line, stating that, hey, listen, he was going to do this 3-hour presentation, which, by the way, the first one he did was a year and a half ago, and he's going to basically lay out how Herbalife is a fraud. And the way that he was doing this, he spent $50 million of his investors' money for an investigation evidently the last year. And the way he was doing it, as you explain it, is that through these clubs, what they're basically doing is inflating figures on a continual basis. And in fact, each club loses $8,000 per year. Now, what happens on a strict definition of Ponzi scheme, which he's saying that Herbalife is that it has to do with a continually deal of bringing more people into a product, and no one's making money. And that is only a distributed deal going. Well, bottom line is that the market didn't believe him. And Herbalife, what does it do? It goes from a price point yesterday of 57 to 68. Now, you did that with 27 million shares, but what Herbalife has not done is got over its last swing high. And if I've learned anything, those swing points in markets, folks, are where markets talk, walk, and squawk. When you take a look at where Herbalife is right now and to a correlation of where it can go, this baby, I suspect he's still going to be right on the deal. I don't know what his next deal is going to be, but it looks like Herbalife absolutely can get down to this, 31 area. What has happened in this get-go down here is that we got the 52, and what you're going to see is that on a monthly basis, and that's how this is shaken out, the monthly volume expanded a bit. But by the end of this month, it's going to need 78 million shares. Why? Because it was going against the last downdraft when Herbalife went from 69 to 49, and we did 78 million shares. So it looks that you're going to get a rejection of that lower price once again. You'll get a bounce. The bounce will probably continue. But the larger picture is that these bottoms out here, either high volume lows, they want to get tested. What does get interesting is this, is that how it comes into 47.16 is going to be really important. Why? Because that's the high of one of the low bars. Now, if that had done it this month, that would have given more validity to the point that, guess what, you can't bust it down, and you're going to bust it higher. So that battle is continuing on, and I suspect it's going to continue on for quite a while. We take a look at some of the higher volume stocks in a low volume market out here today. Well, let's go to Facebook, because the FB, after the close, we're going to be having action with Facebook. Facebook right now is up $1.72. And what do we have? Okay, so the last highs out here in Facebook, March highs, 72.59. You're at 70.99. Volume out here today is 51 million. It's done 59 up there. That's on the daily basis. We take a look at this on a weekly basis. And Okay, so let's see. On a weekly basis, 72.59 was 271 million. Last week we did 193. We're at 141 right now. You know, we'll see where this shakes out, because yeah, this is going to be a close call. Meaning, you know, can this get up to its highs before it basically gets croaked? Because what you do have is this: just as the market has, when it's come down in April, it had some volume. Let me put this back. Yeah, she wants to go lower. This is going to be interesting watching the shake out. Okay, so check it out. The way Facebook is set up, it's 79.9. The way Facebook is set up is that, yeah, you can get down to 55 in a heartbeat. You have, well, when Facebook was at its highs, February, March, and April, you had zero volume up there. 293 million on February, 258 in March, 271 in April. Then it comes off that high with 431 and 493. Goes back topside with 127. This is going to be interesting watching, you know, Facebook come in with their numbers tonight. What you do have happening, which is amazing, particularly folks, you know, we're basically, you know, in the advertising newsletter business, and what is happening is this, is that mobile advertising, folks, is overtaking radio advertising, overtaking print advertising. And the amazing part about it, though, to me, especially being in this business, and I was talking to my son about this too, who runs all the operations here, is like, how many times do you actually look at an ad on your phone? It's very, to me, I mean, I use my phone like a computer, but I don't look at ads on it. But if you want to understand how the business runs, so watch this. This is where the bureaucracies come in. What you have, folks, is that you have 3 or 4 very large advertising companies. Those advertising companies run probably, I don't know what the exact amount is, but they probably run 40 to 50% of all the large companies' ad budgets. And what they do is that they run these budgets off of spreadsheets. That's how they run it. And the pitch itself, meaning the pitch by Zuckerberg, the pitch by mobile, is that, hey, you have to be here, you have to be here. Well, what has happened is this: mobile has got enough traction to be there. Then what ends up happening is that the advertising agencies themselves will convince all the companies that they have to be there. Why? Because they're basically, you know, their commission is basically 15, 16, you know, 15%. So they want to place as many of these as they can place. And they place them using spreadsheets straight across all the networks. You know, so it's just intriguing watching how this whole thing shakes out. Because I've seen many times, you know, before it used to be, you know, Arbitron is still big out there, and Arbitron, of course, is arbitrary. And the reality is most of these numbers are just never real factual numbers. What you can get now digitally, which is really great, is that you can get much cleaner numbers. And the real key is going to be, can you prove, like on our site, we can prove exactly where they are, not who they are, but that you have ads that are placed that are not little tiny pictures off to the side. Inside the larger businesses, what you'll see when you go to some pages is that there's large companies that are paying a good amount of dollars for ads that are never seen, period. Okay, so it's intriguing, you know, in that how this whole business runs. But the bottom line is that, to cut to the chase, it's the bureaucracy that basically runs it. And then, and it's the reason I'm bringing this up, because in the Facebook case, that they've done a very good job of selling that you have to be, for large companies, on Facebook. You know, so we'll see how those numbers come out after the close. Let me just see what they're taking in per quarter right now. So, big money, man. Okay, so Last quarter, they took in $2.8 billion. Billion. You gotta love it. You stay right there, folks. It's Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. We're coming right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mob BI in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Right now, the Dow's down 18, Nasdaq's up 18, S&Ps are up by 7.25. After this close, folks, you get a slew of numbers and earnings coming out. You're talking about, there's a good 30 or 40 of them out here. Inside of that, of course, you get Facebook coming out. We have Illumina coming out. You got Sally Mae coming out. You have, EGHT. There's going to be a lot of action after this closeout here. Qualcomm will be a big one. Qualcomm can put some juice into the market up or down, no doubt about that. If we go over and we take a look at Qualcomm had a heck of a day yesterday. What you're doing with Qualcomm is that she was coming into that high with volume. We're at 81.65 today. Let's see. Okay, so the top of the range, let's go 81.38. 81.66. Oh, this is a trip. So 81.66 is the high. It's hit 81.97, and you're trading at 81.64. That's on the daily. If we put this on a weekly, and we check this out on a weekly, what you're going to see is this, is that Qualcomm is going into the high from where the equity went from 81.66 to 76. That had 76 million, 60 million rather, and we've done 25. So in that context, so watch this. This is going to be great watching how this shakes out. So we're going to do a basically theoretical, well, this part wouldn't be theoretical, meaning what is the definition of a success or failure as you're testing a swing point. So this is how it is. The swing high on Qualcomm is $81.66. Your volume on a weekly is 60.94. We're at 81.67. So what you're going to be looking for is this. In the next 7 minutes, if you close over the 81.66, that says you can go higher no matter what the volume is. If you close under that today, that would be saying that, guess what? That would be a failure, and that would be saying that Qualcomm, whatever numbers they come out with, Qualcomm will be trading down versus trading up. The volume number is 25 million, and 25 million is going against 60. So the way that I'm doing that is that 25 million, we're already into 3 trading days, folks. So we add 2 more, guess what? That's only going to be another 16 million, right? So that would be 40 million versus 60, and you are speculating that, there's no doubt. I'm speculating 2 more days, averaging out what we did for 3 days, saying, okay, bang on 2 more. But you are 20 million short right now, which would be 1/3 shot, a 30% shot of what the high was. You're testing that area, and, we'll see where it shakes out. These are, when you're learning about how markets move, these swing points tell you a huge amount, and what you want to do is you want to basically, you don't have to trade off these, until you really get used to them, but this swing points are where the market talks, walks, and squawks. And that's on a technical basis. Fundamental basis, what you have here is this, and this is my speculation, theoretically, how it works, is that as you have funds that are moving out, they takes them months to move out of equities. That's the bottom line. It takes them months to buy, takes them months to sell. Well, what ends up happening is that when you're up at these levels, as they're pushing out a little bit more and a little bit more, a little bit more, they got to keep the news flow going so they can keep it at highs. They got to keep the analyst community happy, and the way you keep the analyst community happy is that they'd be basically calling up, turning, a couple different banks saying, hey, we're thinking of doing this deal or this deal, meaning fee income. What that relates to immediately is that, okay, no, we get some analysts follow them that know this thing's going to stay up because they want to get fee income coming in, okay? Now, as it goes up to that level, they're moving some out. As they're moving some out, bottom line, that's why at a high with light volume, swing points would be failing. Why? Because what happens there is that as that is getting pushed out, it's all about distribution. So it's going to be interesting to see just exactly where, Qualcomm closes, number one, and number two, what are the numbers after the close. The amazing part about it is that no matter how big or large the number is, meaning the number that the stock is trading at, it is amazing to me that they can actually test these to the penny. That's the thing that's like, you got to be kidding me, But bottom line, that's how it shakes out. If we go over to the S&P for a second, what you're going to see coming in, we get 4 minutes coming into this close, ESU4. We'll see whether the same trader is in here trying to sell a little out. It's only down, well, right now we're trading at 6.75. The two places that I had been talking about was at the 12:30 time frame. That's at 1978.25 is that low. The volume is accelerating just slightly as we're coming in here. We have, let's see, you get 3 minutes left. You're at 11,000 contracts. That's after hitting a high with 16,000. That's not that much. Bottom line is that what I do expect, though, is that you're going to see this trying to get into that level. A failure, of course, a big failure would be, a normal failure would be closed under 1980.50. That would be a setup of the high of yesterday. A larger failure, however, would be the close under 1978. 1978 would be the number. The reason being is that we traded to a high of 1978 on the 3rd, and then you came down very fast to 1945. You went back up to the 1978 on the 16th, and then you came down really fast on the 18th to 1942. So those benchmarks up there are the 1978 level. That's the benchmark you're going to be looking at as we come into this close. A lot of earnings are coming out there, so you stay right there. We're going to be coming back with all those earnings. Look at them all. Oh, we got a slew. Big time. You get... let's see. Angie's List. Oh, man, Dave picked up an Angie's List a long time ago. Angie's List is, of course, a consumer website that has been losing money forever. Bottom line is that, I suspect they're still in business, but the stock doesn't do much. You get Berkshire Bankrupt is going to be coming out. Oh, Cheesecake Factory, Cirrus Logic, Citrix Corporations. Let's see. E-Trade, Equifax, Ethan Allen Interiors. What is there? Going to be another big one out there. Healthways, IDX Corporation. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Right now, you get the Dow down 25. Nasdaq's up 16. S&Ps are up 6. You stay right there, folks. Come right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom, you've really assembled a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now, I would think.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And, there'll be a lot of numbers for you in the next hour. Let's take a look at one of our cards. This is by an author that's unknown. The start to a better life, a better world, or a better future is simply to our belief that it is possible. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow finish down 26. NASDAQ was up 17. S&Ps are up 6. Gold contract, 1305. Silver's at 2097. You had the bonds trade flat out here today. 125.12 on the 10-year. 138.15 on the 30. King dollar. She's up 35 ticks at 80.90. You had the euro off 4 ticks at 136.61. The yen trading out at 101.52. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? It's going to be interesting watching this whole thing shake out, folks. So we go to the cash S&P first. This is what you have. We are at 1988.29, and that's over all the highs. 1985 was the high, the first high generated on the 3rd. Yesterday you had 1986.24. Your over highs, that says, guess what? You can go higher. We had a very small price spread out here, however, today. What that tells me is that, guess what? Even though you could spike higher, bottom line, we're coming lower. Why? The SPY. The SPY closed out here at 198.64. That was over the 198.24. We did 58 million shares versus 52, but the SPY has continued. Well, the biggest down day that we had out there was the 17th, and that 17th on SPY went from 198 to 195, and we did that with 143 million shares traded. There's going to be big numbers out here, though, and we're going to go through a few of them right now. Qualcomm, we were talking about Qualcomm right into the close of the market. Qualcomm closed at 81.60. It's trading at 79.34 right now. We were talking about what a failure is. Bottom line is that the amazing part about it, when we talk about small numbers, too, the number was 81. Put this up. I think it was 81.66. 81.66, right. It was 81.66. It closed at 81.60. That's basically a failure because on the weekly it was going to be lighter volume. And now we'll see where this shakes out. At this point, it's down minimally. It's down all of a dollar. TRIP, T-R-I-P, TripAdvisor. TripAdvisor closed at 107.36. That was up $3 intraday. Right now, that's down $7 into the close. I did just come out with numbers. The swing point on that is 100. That was what it was trading at last week. We're at 99.50. Numbers go like this on TripAdvisor. The earnings per share was 55 cents. Revenue is $326 million. They were looking for 61 cents, folks, for the earnings number. They made 55. Revenue, the revenue came in about the same. Bottom line is that you do have it trading off a bit. Angie's List, this is an equity that continues to go to lower price. Angie's List closed at $10.17. She is trading out right now at $8.98. That's down 10%. That's a big number. This is an equity that our man Dave White had brought up years ago that even when it was going public, it had never made any money. And they ran the stock from a price point of, I think it went, well, when I'll get the IPO. I think I'll get the IPO number for you. But they ran it from $11 to 28, and of course now you're back to 10. What this is going to do, this report right now is going to do is this. It's going to break it under the 894. You break under 894, and we have volume on Angie's List. what that would set up is that you could have a company that basically implodes. This is how it goes. The loss estimate was 24 cents. They lost 31 cents. The revenue estimate was 80 million. They took in 78 million. You know, it's pretty incredible. If we let me just look at this on the numbers basis. So, no, you still have revenue that basically has been going up. You know, Crush, C-R-U-S. Let's take a look at Crush. This is Cirrus Logic. They design, manufacture integrated circuits. That closed at $23.97. That is trading right now at $22.50. And at $22.50, yeah, she had swung over a high. You know, basically, let me just put this. This looks like it's already had a nice little run. Oh, yeah. This had tested us low off the bottom. Small consolidation. Couldn't get over the 25 price point after, you know, coming down from 45. Now what is she going to do? She's going to go after the low that was established in January of 03. That's the way this baby's set up. So that's pretty that's pretty intense on the way down. Big numbers that are going to be coming out here. So the S&P itself, folks, right now the future S&P ESU4, we are out there trading up about $6, I think. Yeah, we're at $6. We're at 1980.75. Some of the Dow stocks out here, this is what you have. We had Honeywell down 59 cents. Boeing got hit. That was down 303. Caterpillar was down $1.68. 3M was off 49 cents. Walmart was up 35. United Technologies, UTX, General Electric, they had got really smoked yesterday. They both broke B points, broke them with volume. United Technologies is going after the benchmark February 5th area. The February 5th area, folks, in all the indices, wants to get tested. That's a high volume low, and you basically, piece by piece, some of these larger equities are going down there. GE also broke its swing point, broke it with volume yesterday, Monday rather. GE's trading at $25.91. At $24.32, that also has a high volume low down at those areas. GILD, Gilead. Gilead is halted. We'll see what that news is going to be. The earnings, oh my God, look at this. Glad I didn't shut the biotechs yet. We got them once. We got them good because it was ABC down. Gilead closed at, well, we'll see what she has to say first. So the estimate was $1.79. They made $2.36. That's the bottom line. Top line, revenue estimate was $2.98 billion in revenue. They took in $3.48 billion. And we'll see what this news is going to be about and whether it's going to be an inversion, whether someone's going to be taking them out, or they're going to be taking someone else over. Or in fact, is it just such a large number that they may be coming out and saying, we're going to up all our guidances. What's going to get interesting about this is that the way that the IBB is set up right now, folks, is that it's, you know, to me, it's ready to basically hit that shot. So what you have is this, is that Gilead is 8% of it. And so what that would be saying is that that'll shoot up, which would be beautiful, okay? Meaning, it, you know, the IBB closed at 259. That could hit 266. That could actually get, yeah, 266, 270. You know, if it doesn't have any juice in it, the IBB still has a high volume low from April. That low is 207. 220 is the top of that low. And then what it also did, it proved itself in the last couple of weeks when it did A to B equals C to D on the way down. You pulled up with lighter volume. Well, actually, I'll be able to, right now, yeah, right now it's interesting. So the IBB was up 566. What you have right now is that she's up $2. That's without the Gilead trading. Mr. Tom O'Brien, this is TFNN. You stay right there, folks. We'll be coming right back. We had the Dow finish down 26, NASDAQ up 17, S&P's up 6. You have gold trading out there at 13.05, silver 20.97, bonds 125.13 on the 10, 138.15 on the 30. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days, and will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish down 26, NASDAQ up 17, S&P's up 6. And as we do each and every Wednesday, now at 20 past the second hour, folks, we get our man, Mr. John Logan. And as of this Monday, folks, we have a new schedule at TFNN. John has an outstanding show each and every trading day, 8 to 9 Eastern Standard Time. It's the Global Market Pulse. 8 o'clock in the morning. He kicks us off, folks. We go live now from 8 o'clock in the morning, 6 o'clock in the evening. All of that programming, you can get right on your cell phone at TFNN.MOBI. If you'd like to get Tiger TV and see John's charts each and every morning at 8 o'clock, guess what? The way you do it, folks, just go to TFNN.com. On the right-hand side, what you're going to see is Tiger TV. You'll have to see the TV right up there. You just hit that TV. John does an outstanding job every trading day. You can get his charts. You can check it out no matter where you are and what you are doing. John Logan, what's going on?
Hey, Tom. Good to be back with you. How are you today?
I'm doing great, man. I got to tell you, you're doing an outstanding job, John. There's no doubt. You seriously, man. I love your program. And I like your beard, too, man. That beard looks good. It does.
Well, thanks. But let me tell you, I mean, between me telling a couple of people I wasn't going to shave this thing until we had some breakdowns in the S&Ps.
I heard that. That's so funny. I heard that show. I know.
Yeah, I mean, it's, by the way, it's looking, we may be like the year 2035 or something like that before we get below profiles again. So we'll take care of that soon enough, I'm sure.
Well, it's so funny when I heard you say that, right? And what happened, folks, the only time thus far that the S&P had me selling, okay, was last Thursday. It was the 17th, okay? You got some selling in it, but that was it. And, I had heard John, saying, well, when we, just as he said, when we would get below profiles, we'll shave that beard. You might look like Noah, or you might look like those. What are those rock stars? With the big long beards.
Yeah, the
ZZ Top. ZZ Top.
I've heard a lot of that lately.
Your mother will kill you if you look like ZZ Top. I'm telling you. Oh man. Hey, so
tell you what.
Go ahead.
Well, I was going to say, talked a little bit on the show today about something that maybe your viewers could, since it's earnings seasons, maybe they could benefit from. A lot of times, earnings come out, you don't know how stock's going to react at all. I mean, it could be good earnings and, bad stock action.
Sure.
How that goes. So, we talked today about, let the earnings come out. I mean, there's no reason to throw the dice beforehand.
Right.
If you don't have to.
That's
you're
right.
already in stocks. If you're already in the stocks and you're already kind of bolted in, maybe you got a hedge on or something like that, it's a different story. But we talked this morning about trading the reaction instead of the action.
Yes.
And that's always been something. I mean, you look at Apple. I mean, Apple is a fine example of that.
Yep.
Apple came out, we bounced around, things settled. We were above profiles, and boom, okay to be long, not okay to be short, and it kind of walked you through it for you.
Right.
So that's kind of some of the things I think people need to kind of understand in earnings season is, they can read all they want to, they can get all these hunches, but I mean, sometimes it's just better to let these things come out and then try to deal with them, however technically they're looking, actually. So.
Yeah, no doubt. And folks, as you're at TFNN, okay, so John kicks us off every day, 8 o'clock in the morning. As you're here, bottom line is that you can test drive his Taz signal box, okay? So you can check that out right in the carousel, folks. You can test drive that absolutely free. The video is still on the side each and every trading day, but the bottom line is, folks, you have them for a full hour, which is really dynamite, So
yeah, we got some really cool enhancements. I was actually sending you a kind of a recording today about this, so you can look at it with that signal box. A lot of filters. We're adding a couple of thousand instruments now. We've got the S&P 100 and quite a few commodities, and it's going to be more of a scanner situation where we talked last week. Just case in point about the market's going up.
Yes.
Doing that kind of relative strength trading. What do you do? Do you buy things on their highs? Do you keep doing that, or is that the high risk trade?
Yes.
Probably. Do we want to try to pick out things that are not acting that well, a little sick looking, in case the market ever does pull back?
Sure.
You got a good short on possibly, and that little piece of technical information that signal box provides, a chance to look at things that are either cooperating with the market, not cooperating relative to profiles. And it makes it pretty black and white if you're trying to pick out things that are anomalies to try to hopefully take advantage of. It's a really cool little thing.
And you know what's cool? When I was watching the program today, and folks, you'll see that he has the profiles up, number one, but he had the signal box up as they were searching, as you were searching, basically equities.
Newer version.
Yeah, which was dynamite, because that's what we're talking about here. Is that okay? So you have market at highs, and the correlation, folks, is you want to say how are equities reacting? Meaning, are they weaker or stronger? Because, if you expect a pullback, the equities, of course, that have been weaker, they're going to get killed compared to the ones that have been stronger. That's just...
Yeah, there's a couple of really simple things that you just picked out for you. It wasn't like shooting fish in a barrel or anything, but, just things to think about. FOXA.
Yes.
Let's see, what's the full name of that? Let me pull it up.
That is 20th Century Fox.
Yeah, that's it. That's it. That's been something that, it's showed itself. It's an S&P 100 stock. It's got plenty of liquidity. And, that's something that a regular old trader investor could probably get borrowed to take a look at something like that from the short side if we ever do get a pullback.
All right.
Looking at Schlumberger, too. Have you looked at that lately?
SLB. Let's look at it right
Wow.
now. Let's see. Okay, SLB. Yeah, this is SLB. Come on, baby.
Yeah, I was going to wait till you're... Okay.
There we go. Okay.
Yeah. Yeah, but this is going to be a little bit of an interesting play, in my opinion. I don't know how you're looking at it from the ABCD situation.
Yeah.
But we've got crude oil, different climate for crude oil in general because of the supply in the U.S. now.
Yes.
And we've got troops on the ground in Gaza, and all the things that are kind of popping up and are I'm not trying to get political here, but nobody's really paying attention to these things, in my opinion, very
no, I agree. There's no. When I was driving to work this morning, I'm saying to myself, that the world's going to hell in a handbasket, and the market doesn't care. It's like, and I've been doing this long enough. It's going to change because the more that you don't pay attention to it, folks, the more that it comes out of nowhere, and guess what? Then it's a problem. So.
Well, that's true. I mean, in case in point, like you got the reason they start small brush fires in California is to stop a huge fire later.
Yeah.
You try to mitigate those circumstances so you don't have an implosion and everything burns to the ground later. And that's the kind of things I think that me and you are probably thinking about here. It's like we haven't had I was listening to Larry today. We haven't had a 10% pullback in 30 some months, or I don't know. It's just been forever.
2011, I think.
Yeah, it's been crazy. So yeah. I'm with you. These things could really change drastically, and then everything, in my opinion, would reprice theirself almost exponentially to the wrong side because of the kind of the downdraft that may happen. So you just got to keep your eye on something like that.
And what's so cool about what you do, John, though, is that just as I said at the beginning, you don't have to trade it before the numbers. You can trade it at the numbers. You know where the profiles are set up, and then you can go from there. Don't forget, folks, every trading morning right now, I'm here, Mr. John Logan, 8 o'clock Eastern Standard Time. Tune in. John, look forward to the show tomorrow.
Okay.
Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 26. You had NASDAQ up 17. S&Ps are closed out at 1980, up a 5.75. If you'd like to test drive my daily newsletter, folks, the way you do it, come over to our website at TFNN. You go to newsletters. You go to trading newsletters. You can test drive Market Insights 2 weeks absolutely free. Okay, number-wise, let's go over to Facebook. Facebook came out with numbers. Facebook closed at $71.29. She's trading up $2.50 right now. She's trading at $73.85. Numbers go like this in Facebook. The earnings, the estimate was 32 cents. They took in 42 cents, 10 cents more. If we take a look at where she's trading into right now, so she's up a couple dollars. She's going to go over this 72.59 swing, which was generated out there in August, and she is going to be, that's her high, 72.59. So she's going to be over the high. The real key is going to be, can she hang over that high and stay over that high? Qualcomm, we had been talking about at the 3 to 4 time frame. That was a test of a high, had lighter volume, failed by 6 pennies. Qualcomm come up with numbers. Qualcomm had closed at $81.60. She's trading at 79 right now. And it looks like inside the Qualcomm deal, let's see what they're saying. The revenue beats. Qualcomm, the biggest maker of mobile phone chips, forecast fiscal fourth quarter profit that may fall short of analyst estimates, citing challenges in its technology licensing business in China. Net income in the quarter ending September will be $1.03 to $1.18. The San Diego-based company said today in a statement, on average, the projected earnings for the analyst community was $1.23. So if they come in with $1.03, that's no doubt a pretty good miss. TRIP, T-R-I-P. This is TripAdvisor. TripAdvisor closed at 107. She's trading down $10 at $97.50. And let's see, we put this on a weekly basis. Yeah, she has two. This is a classic. So her first high, folks, is 109.79, 8 million shares. She tested that the week of July 4th with 5.3 million. Even if we add in the days that, a day and a half, you'd have to add in for the July 4th week, that would still be less than the last high that was generated. The last high that was generated, by the way, then we went from 109 all the way down to 75. This baby basically wants to get into a lower price once again. That's how this is set up at this particular point. The GILD. Now, this one's going to get really interested, and this is why. So Gilead Science closed at $90.34. They stopped the trading in Gilead, okay? And they just opened it again. And it's trading at $90.89. But check this out. This is what you got to wrap your head around here for a second. The numbers that they did were extraordinary. The estimate was $1.79. They made $2.36. The sales were just as extraordinary. $2.9 billion. They did $3.48 billion. What's going to get intriguing here, which I still can't figure out as we're doing this, is like, number one, why did they stop the trading in the stock, number one? Because it doesn't look to me like there's any more announcements out here. And what we do have is that you're trading up $1.22 now. So now it's up $1.22. Now, in that context, I want to, that Gilead is 8% of the IBB. Well, the iShare Biotech Index, if you take a look at that little baby is just about ready for basically a sell. It already, if you remember, the IBB, folks, is what first, in February, brought the NASDAQ down very quickly. The IBB was the leader. Then it's a beautiful counter-trend bounce. The IBB had gone from 274 down to 207, had a counter-trend bounce up to 266, and then guess what it did? Did another ABC structure on the way down. Equities have identifications, and they don't have them all the time. What does happen is this, is that when they start having them, you want to pay attention to them, and in this particular case, the IBB is continuing to do ABC structures on the way down. They do counter-trend bounces, no doubt, but the ABC structures on the way down, they take the B point out, take it out with volume, all of the above. This baby looks to me like it's setting up another ABC structure on the way down. Can I get a couple points higher? Yeah, I can. What I like about this trade right here, right now, is that Gilead had come out, blew away the numbers, and right now still having trouble getting to higher price. We'll see tomorrow morning. This is great. I appreciate this, Terry. One of our tigers in the den just come out and said that Celgene tomorrow morning is coming out with numbers. Celgene's trading at 89.12. And let's just see. Okay, good. She's coming out before the market's open. And this equity, we put this on a 2. Okay, so this would be dynamite. See, what's cool about this is that depending on how this is trading in the morning, it will give you a good idea of, is the IBB ready yet to basically sell? Because inside the IBB, which is always important when you're trading the ETF structures, is that you want to know what are the weighting structures inside them. And Celgene is the largest weighting structure inside the IBB. Gilead is number 2. Celgene right now is 8.5%. Gilead is 8.3%. So that's really cool to know. So you know Gilead is already out. You can take a look at what that's trading tomorrow morning. Celgene is going to be out before the open. The third largest is Amgen. And the fourth, and this is what's really cool, so check this out. And this is where you can get basically a nice little leap on the aspect of where equities are, have they run higher or lower, and how are they doing that? Well, Biogen today, folks, ran up 10%. But guess what? It's running into its downdraft. Biogen came down from 355 to 313 and did it on 5.7 million shares. Well, today, huge bounce, 10% bounce on 4 million. Didn't get, well, it got over one swing point at 332. And that's saying that, yeah, great, you know, you can get to the top of that swing point, 355, which is still a long way to go. But when you look at that on the larger basis, what we're doing is that thus far we did 6.3 million shares. That 6.3, though, is coming into 11 million on the way down. So the way that is set up is that that's a counter-trend bounce in an equity that wants to go lower. If we take a look at CA, they design, develop, market, license, and support computer software. That closed at $28.36. That is trading down $2 right now at $26.90. That's $1.50 rather. Let's see what these numbers look like here. The estimate was 60 cents. They made 65. That's the bottom line. Top line, that's the, and then the gross revenue, the estimate was $1.09 billion. They took in $1.07 billion. So you have this equity that's trading down a couple dollars. Oh, look at this, though. This is going to be interesting. That's going to be another ABC structure on the way down. We pull this back, put this on a 2-year. Oh, yeah, this is a mess. Yeah, this is an equity that wants to, she's got a high volume low. We put this on a monthly basis. Yeah, you want to take a look at the CA. So we're at 28.36. This can make the run rate to $21. 21 to $23. That's what this baby wants to run down to. Caterpillar, we take a look at Caterpillar. Thanks, Terry. We take a look at Caterpillar. Caterpillar was down $1.68 out here today, and you had a slight expansion of volume. Caterpillar is coming out with their numbers before the close tomorrow, 07:30. Caterpillar is going to be coming out. If we take this and we also put this on a weekly basis, this is going to be a big heads up. The reason being is that what you have, in fact, I'll turn this into a monthly. What you have, yeah, this is a beauty. Okay, so check it out. It's a beauty, of course, to sell. Not of course, but Caterpillar last high was 116.55, 2011. Had 173 million up there. It tested that, so that was the high of 2011. Went back up there in 2012 and tested it with 118. So 118 versus 173, gave it up in spades, went from 116 down to 81. Well, guess what? You back up there with 68 million, folks. So it's 68 million versus 118 versus 173. With this, and this month we've only done 43, so 68 is going to be the number, probably somewhere around there. That's a light volume, folks. You stay right there. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Right now, we had the Dow finished down at 26, Nasdaq up 17, S&P's up 650. Let's go to Nick in Tallahassee. Hey, Nick, what's going on?
Hey, how you doing? I was calling in about a insurance stock,
Okay.
HCI.
Let's take a look. You get HCI. They offer property casualty insurance, homeowners, condominiums, tenant insurance. The low is $30. The high is $53. They pay a 2.5% dividend. Okay, so are you looking to buy this?
Yeah, looking to buy it.
Okay, so if we take a look at this on a daily basis first, what you're going to see is that this baby came down hard. You know, it was trading at $50 in March. You came down with monster volume. You know, we went from 50 to 40 with 1.2 million the following day. You get to 38 with 800,000. Now, if you put this on a weekly basis, what you're going to see is that you not only came down hard, but, you know, you came down off the highs, Nick, with volume. So we reached a high on in fact, I'll change this to a monthly. Okay, so watch this. Now, this is, bottom line of the, you know, you don't want to touch this thing. And this is why. So this equity, first off, folks, went straight up from $6 in September of 2011, going all the way up to $53. So it didn't breathe on the way up. You know, fast and furious, no doubt about it. Got up there really nice. On the way down, okay, what you had is this. You went from 53, so you made the monthly high with 4 million. Then you come off the monthly high with 7.3 million shares on the way down. You never want to see an equity do that. You know, so what that is stating is that, you know, you had some large players get out of the equity. I would first wait until you get a test of the $33 level. That was the last swing low. See what happens there, but I suspect what you're going to probably see is this thing wants to run to $22.
All right. All right, man. Well, appreciate it.
Now, hey, let me ask you something. I know you're from Tallahassee. So,
yes, sir.
Do you know this company?
Well, yeah, I actually live in Tampa, Florida, so I've seen it a little bit.
Okay. So, do you know... Okay, so the reason I'm asking folks is this. You know, like the gold and silver stocks, I know fundamentally upside down. Bonds, I do. But I happen to know this company, too. Because the reason being, Nick, because I'm in the Tampa area also, right? And I watched I watched folks what they were doing with this company. But one of the main beneficiaries of this company has been, it's been a political deal. It's been a political deal that we have Citizens Insurance in Florida. And what Citizens basically has done for a long period of time is that when we're on the water or when we're near flood zones, they had to insure us, okay?
Yeah.
And we haven't had any hurricanes, so Citizens has made big money. Well, what has happened is that the administration that's running the state has been pushing off Citizens to private groups. And what you have here on a fundamental basis, this is basically someone that got pushed off huge amounts of contracts. And the reality, now what you're hearing from me, the reality inside of that all those contracts have already got pushed off, okay? And there's been a million different, you know, articles about it, folks, is that, you know, politically creating business is pretty amazing. They claim on 1 second that you want an open market. Well, guess what? In the second, you know the politician, you end up getting a huge amount of contracts. I believe, Nick, on a fundamental basis, that most of the people that they try to push out of Citizens have been pushed out. And what you have here is that's where those expansion on the way up, when that equity went from 7 up to 53, because they didn't have to do marketing. What they had to do is that they had to basically make sure that, whether it's the senators, that, you know, that politically they had to make sure everyone was cool, so that as they're pushing contracts into that company. Do you know what I mean? So.
Yeah, gotcha. Well, all right, man.
Okay. Have a great one, man. Have a safe one. And what is intriguing, folks, is this, is that what has happened, now the last time that Florida had large problems with hurricanes, almost 7 years ago, you know, we basically have not had any problems. And, of course, you know, what ends up happening is that your probability goes up. Well, I don't know if that factually that happens, but it seems that it would go up. What has happened that I've seen in the last 3 or 4 years, though, is this, is that our weather pattern in general has stayed cooler much longer and hotter on a much shorter basis. And that's been happening the last 3 or 4 years, so it's really going to be intriguing. Now, the Gulf of Mexico, no doubt, is warm, and it's really, really warm. And that's what does fire up hurricanes when they're coming across. But what has happened, you know, also in the last few years is that most of those have gone up the coast and they've missed, you know, Florida, and particularly the west coast of Florida. So those insurance companies, that's all it's about, is that what is the premium paid, what is the reinsurance on it, and what do you get to keep at the end of the day. Don't forget, folks, at TFNN, we have a new schedule, started Monday. We got our man, Mr. John Logan, kicks us off 8 o'clock in the morning, the Global Market Pulse. We go to 6 o'clock in the afternoon. My new hours are 3 to 5 Eastern Standard Time. You can get all that programming right on your cell phone at tfnn.mobi. And if you do want to watch Tiger TV, it's very easy to do, folks. You just go to tfnn.com, and what you're going to actually see when you're looking at it on the right-hand corner, you're going to see what's airing on Tiger TV right then and there. You just hit that button, watch Tiger TV, and that pops right up, and whether it's a cell phone, whether it's a computer, whatever you want to watch it on, and you're going to get live content 10 hours each and every trading day. If you would like to test drive my daily newsletter, Market Insights, or the Gold Report, you can do that by coming over to our website at TFNN. You go into Newsletters. If you want to test drive the daily newsletter, Market Insights, go to Trading Newsletters. Market Insights can test drive it 2 weeks absolutely free. You want to test drive the Gold Report, you go to Newsletters. Investments Newsletters, you can test drive the Gold Report for 30 days. Bottom line is you can test drive both of them simultaneously if that's what you'd like. We talk about the XAU and the HUI just quickly before the end of the hour here. We had with the XAU and the HUI. XAU is off 48 cents today with light volume. In both the case of the XAU and the HUI, I suspect we're building cause to get up and into the March highs. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.